You're listening to the Perth Property Show, Australia's only weekly property podcast by West Australian experts for West Australian listeners. Catch your latest episode every Monday at 7 a.m.
Good morning, everyone. Welcome to the Perth Property Show. My name's Trent Fleskens, your host. As always, this week we're delving into a world that we haven't really spoke about in over 6.5 years now. It is title insurance. And you might ask, what the hell is title insurance? Don't I pay enough on the house and content and all these sort of things? It's quite an important one, and it's the type of insurance that I've actually benefited from myself as well. So I thought it was interesting and valuable to get Paul Watkins in from Stewart Title, who essentially are the main providers around the country, I believe, in this type of insurance. So we'll talk about all those things. What is it? Why is it worth it? What does it cost? And some cool anecdotes about people who have actually benefited from it as well. Paul, thanks so much for coming in, mate.
Yeah, thanks, Trent. Thanks for having us. It's great to be here.
Let's firstly ask that question. What the hell is title insurance, and how is it different from other insurances that we would pay with regards to our house?
Yeah, it's a great question because, as you alluded to, when people buy properties, they're looking at a lot of different costs. The cost of getting into the property, the cost of the settlement agent, home and contents insurance, and all of a sudden,
duty.
Cost of movers. It's never ending. And then all of a sudden, this concept of title insurance gets put into play. Why do I need that? And so really what title insurance is about is, unlike home and contents insurance, which covers somebody's house for things like destruction, the house burns down, gets struck by lightning. Title insurance is really about the risks associated with owning a property. So if you think of a property as you own it, it becomes a liability to you for anything that might have happened on that property before you take ownership. You as the new owner are now responsible or liable for those issues. So the most common things that we see are things like a previous owner builds something on the property without getting a permit from council. Patios, carports, garages. They decide that this old house that they bought that was built in the 60s needs an update, and so they just go to town on it and start knocking walls down, putting new sliding doors in, extending it out. Reality TV shows, The Block, all those sorts of shows inspire people sitting at home with the idea that anybody can go out and renovate a property.
The inner handyman.
Yeah, we can just do that over the weekend because we saw it on some home improvement show. A lot of those shows are misleading in a lot of ways because, in fact, a lot of the work is being done by qualified tradespeople. You see this person who's a hairdresser and accountant knocking this extension together, and that's the TV show. And then you've got things like Bunnings, which make acquiring the materials for home renovation so easy. You put those things together and you've got a recipe for people in Western Australia buying properties that may have been built in the 60s or 70s, but over the decades have been altered, extended, moved around and changed without getting building permits. And that's an issue that a lot of people aren't aware of.
So I've gone and bought something and half of it's not actually approvable. It really needs to get taken down. And I go, well, the value destruction on that is quite costly.
Very costly. And that's one of the problems, is that if you end up buying a property where you've inherited an unapproved building work issue, there are ways of getting that approved, retrospectively approved. But you've got to satisfy the relevant Shire Council that the building works are building code compliant.
It's certifiable. Yep.
Yeah. But what if that unapproved building work was carried out in 1987? Then you've got the issue that it may have been compliant with building codes in 1987, but those building codes are different to building codes that exist in 2025. So who's going to certify that? Nobody, because it won't be compliant.
So you'd have to go and spend money to upgrade.
Upgrade and rectify. So that's one issue that the title insurance covers. It covers situations where you buy a property and unbeknownst to you, you have a property that has unapproved building work on it, and that after you take ownership, you end up with an enforcement order or building notice from council.
Like years in the future?
Can be 10 years, it can be 15 years.
Okay. So once you've taken that policy out, you're good.
Absolutely. You're insured for the life of your ownership of that property.
Yeah.
And that's what we see in WA a lot, is you get somebody who buys the property, and your listeners may be aware of this or maybe they're not, but there's no mandatory vendor disclosure laws in Western Australia. So even if a seller or a vendor knows they've built unapproved building work on the property, they're under no legal obligation to disclose that to a buyer. It's very much a buyer beware market in WA. And so a vendor is not going to disclose it. You're going to buy the property, and then you may, say 5 years later, decide, it's about time we put that swimming pool in. And that owner does the right thing. They go to council, they get a permit. So council suddenly are interested in this property for the first time ever because there's an application in now to put a pool in. And that's when they discover all this unapproved work that has been done previously.
The lean-to at the back.
Yeah, 25 years ago. And so that's where we get a lot of claims in WA.
They give you the approval for the swimming pool, but they also give you the enforcement order for the lean-to.
Exactly. In fact, what they do is they say, once you've fixed up the lean-to, come back to us with the swimming pool. All right? Let's do one thing at a time here. The other major risk that we see in Western Australia are boundary risks. So most people in WA won't spend money on getting a survey as part of their due diligence.
I'd say nearly no one would.
No one
You want to
does.
buy a house, you're racing at the moment just to get your offer accepted, warts and all.
Exactly, yeah. Western Australia is not unique in that regard. It's a lot of the settlement agents, conveyancers and lawyers will put it in their letter, you should survey the land. But as you said, most people are elbowing each other out of the way to sign a contract. The last thing they're going to do is spend $2,000 or $3,000 and wait 4 weeks to get a survey done.
So when you talk about boundary issues, are we talking about fence issues?
Yeah, mostly fences.
You're on my property.
Absolutely. So that's the highest source of title insurance claims in Western Australia. Fencing encroachments, fencing defects, where the fence is not located on the legal boundary. It's either located on the neighbouring property or the fence is inside your boundary. So you're actually losing available land because the neighbour has built their fence 2 metres inside of your legal boundary.
And is it right in my understanding of the law that if that fence has been there for more than 12 years, that neighbour can essentially claim adverse possession
Absolutely.
to say, hey, the fence has been here, you've accepted that, we now own this land?
Yeah, absolutely. So that's a very live risk in Western Australia.
And is that what title insurance can cover for,
Absolutely.
or just the erection of a new fence? Like, how far does this go?
Yeah, so it's a great question. So it depends on, it's basically a sort of case-by-case basis. So a couple of examples might be someone buys a property, discovers that the boundary fence on one of the boundaries is located inside the boundary. So say it's 1.5 meters inside the buyer's property.
They've lost 1.5 metres times 30 metres.
Across the whole
Yeah,
boundary.
45 square metres gone.
Yeah. And this is a problem because, for example, they've bought the property as vacant land.
They think they might subdivide it.
Yeah. Or they're going to put a house on, okay? And they're assuming that the land that they purchased is as per the title dimensions.
Yep.
1,000 square metres for argument's sake. And that's what we need to build our house.
And you would rightly assume the fence is on the boundary.
That's absolutely right. And that's what people do assume. And that's the risk that we're covering, is if when that assumption turns out to be incorrect. So in those sort of situations, we've just discovered our boundary fence is located within the boundary. We're losing that land. But we need to get that land back to build our house. Because when you measure actually physically from that fence to the other fence line, the land is no longer big enough now to put the house that you want to put in to maintain the minimum setbacks. So you've now got to get that fence put back on the boundary. That introduces a whole new element of risk because now you've got to be dealing with the neighbour.
Possibly legal fees to
Absolutely.
sue them to get that moved, the letters of demand.
Yeah. And the neighbour
maybe
might
compensation.
be... Yeah, the neighbour might be, no worries, we'll move the fence back. And by doing that, by the way, we're now going to be losing that land. So they might be all agreeable to that, in which case the costs will simply be replacing that fence. But not all neighbours are agreeable to moving fences. In fact, I would suggest that from our claims experience, very few are. And particularly in Western Australia where, as you mentioned, the concept of adverse possession is alive and well. And a lot of people get a little bit of legal advice. So if you're sitting at home one day minding your own business, you get a letter from the neighbour saying, hi, I'm your neighbour, just bought this block of land. We've just surveyed the boundary. You're now encroaching on our land by 1.5 metres. You now have to move the fence back, and here's a fencing notice. If you've got a solicitor or someone that you deal with, you might go to them and say, what do I do about this? Oh, how long's that fence been there? Oh, it's been there for 15 years. We'll tell them that you now have adverse possession over that land. You're going to resist that. So we see that as the insurer all the time. It's not simply a matter of saying, dear neighbour, your fence is encroaching, please move it. We may, in fact, end up in a legal dispute with that neighbour.
So what would you cover in that situation? Because if we're in Peppy Grove and that 45 square metres is something that we're trying to get back, that could be worth $1 million.
Yeah. So the short answer is our first port of call is, can we move the fence? Can we get agreement to move the fence?
So you'll start by helping us pay legal fees, maybe.
We've got a panel of law firms in WA that we use for different things.
Like a panel of health insuring.
Exactly.
Yeah.
So we would go to our sort of nominated panel lawyer in WA who's expert in these kinds of boundary issues. Can you help us with writing a letter to the neighbour? The claim's been made, so the costs of that are borne by Stewart Title. And then we just wait and see what the response is. The response might be, yeah, not a problem.
And that's an easy one for you guys.
It's an easy one.
Yep.
The more difficult ones will be the response comes back and says, under no circumstances will we move the fence. In fact, we'll die in a ditch before we move this fence.
Screw you. Yep.
See you in court.
Yeah.
Okay. And then that will require us to make some further, what's the basis of that sort of confidence that they're not going to move the fence? So we'll get some legal advice about that.
Especially if they've got structures that have been built parapet on the boundary.
Absolutely.
That could be a garage that's been nicely rendered with a Fonzie apartment at the top that could cost $500,000 to knock down and change.
Absolutely. So these are all the variables that we look on each claim. Depends on what's there and what's happening. Look, the worst case scenario for us and for our insured is that because of the law of adverse possession, we can't get that land back. We can't move the fence. That fence is now your new title boundary. And so, in fact, you've now effectively lost a chunk of usable land that your title says that you have, but in fact now because of the fence encroachment and its long existing location in that spot, you've lost that. So that then boils down to a compensatory principle. We go from defending the insured legally, defending their title, to saying, okay, look, unfortunately, our lawyers agree with the neighbours' lawyers. They do have these grounds for claiming adverse possession.
It would just be cheaper to give you money rather than fight this and pay the lawyers.
It may not even be fightable, and that's the thing. And whenever you go to lawyers these days, when you're dealing with the potential for litigation, there's a general rule that says that lawyers can't just act for you unless they are satisfied that there are reasonable prospects of success. And that obviously is good for all of us as legal consumers, because we don't want our lawyers leading us on, spend $100,000 with me, when they know we're never going to get up on this. And so they have to be satisfied that there's reasonable prospects. So that's what we get from our panel lawyers. Are there reasonable prospects of us challenging this? And they might write back and say, no, all the ingredients have been met by the neighbour. And so we really don't think you're going to be successful in getting that land back.
So you also mentioned things that are on the title, things like encumbrances and restrictive covenants and things like that. Now, I understand that part of the insurance is we can't have already have known that there was an issue if we were going to claim something with the title insurance. Are there things that are on the title that we can reasonably claim for in that legal spectrum as well? We've spoken about the physical structure, we've spoken about boundaries, but what about the title itself?
Yeah, the title insurance policy generally excludes anything that's registered on your title. So that would be, there could be a registered easement, there could be a registered covenant, that could be a restrictive covenant. But what the policy does cover is non-compliance or a breach of that covenant. So a perfect example that we see all the time is that there is a drainage easement running down the rear of the property. That's registered on title. You're buying the property subject to that easement, but a previous owner has built a deck over the top of that easement. And the easement says very clearly, anybody who owns this property can't build over the top of our drainage easement. It's not permitted. And the authority that has the benefit of that easement has the right to step in and demolish that deck. So we see those sorts of claims all the time where there is a registered encumbrance, but the property doesn't comply with the enforceable terms of that easement. And the other more common thing that we see is in relation to recently subdivided land. So there's a lot of vacant land subdivisions in WA, and we insure a huge amount of them.
What's there to insure about a piece of vacant land?
Yeah. So it goes back to this issue about encumbrances, because vacant land generally means that the approval or the subdivision process is probably fairly recent. Because in most of Australia, including WA, there's generally a rule against subdividing land and then letting it sit vacant for 30 years.
Well, there's an inherent cost to that.
Yeah, exactly.
Interest, land tax, all those sort of things.
So generally speaking, when you're running out and buying vacant land to put a house on, that vacant land is there because the title's only recently been created by the subdivision. But a lot of people don't realise how much legal work goes into subdividing land. It's not just a surveyor's plan. You also have to deal with planning policies and all of the conditions imposed by the relevant consent authority. And so the bigger the subdivision, the more planning policies are triggered, which require things like encumbrances to be registered. And what happens if the developer fails to register all those encumbrances? So what we see quite a lot of will be, and we see this in Western Australia and Victoria, the planning consent authority says, you can subdivide this land, you can create these 50 new lots, but we need to have drainage easements registered along these lots. And we want to keep this development looking a certain way. So we're going to have a building covenant. So you can only build certain types of houses with certain building materials and things.
Styles,
yeah, that's right. And that needs to be registered on title. Okay, but the developer overlooks that, and they don't register those things, and that's not picked up in the process. Right? And so the subdivision plan is registered at Landgate, the titles are issued, but unbeknownst to everybody involved, there's an outstanding condition attached with that plan that hasn't been satisfied. And once the new titles are issued and the new owner buys the property and becomes the registered owner, guess who's liable now to comply with that outstanding condition? I tell you, it's not the developer anymore, it's now the new owner. And so you may be in a situation where you've just bought this vacant land and you're just waiting to build a property on it. You lodge your development application or your building permit to the council to build the house, and that authority says, hang on, we've just noticed that there should have been a drainage easement or a sewerage easement or some other registered encumbrance on this title in accordance with the subdivision of this land. Hasn't been done. It's been overlooked. So before we get on with allowing you to build your house, you've got to deal with this underlying issue first. And we see a lot of those issues popping up. And that's what title insurance covers for vacant land.
I assume a lot of that would happen in the small scale infill side where it's all a little bit more mangled and unique, the property, rather than the larger format greenfield estates.
You're absolutely spot on. A recent claim that we've just settled was like a mum and dad development. They inherited this old property from their parents, and it was an old 50s asbestos cottage.
That's what most of them are.
Yeah.
And most of them are developed by mum and dads.
And that's what they did. And they decided, okay, we'll become developers. So they got development approval. They demolished the old cottage. They're supposed to remove and dispose of the old cottage off-site. But they didn't do that. What they did is they dug a huge hole and they buried 70% of the demolished asbestos cottage in that hole.
Oh, my Lord.
Covered it over with dirt and then said, here you go, it's all done. A council person did a drive past. They could see a nice vacant block of land, signed off on it. The signing off meant that the subdivision approval could be registered at Landgate, new titles issued, and then along comes an innocent buyer. Just bought their first block of vacant land to build the house of their dreams. The builder goes out, starts to build the foundations for the house, and what do they hit? They hit a pit under the ground, and they further digging discovers that there's all this asbestos debris that's been buried there.
Which has now contaminated the whole site.
Yeah. Now, that is more than just a contamination issue. It's covered under the title insurance policy because that constitutes a breach of the subdivision approval, because the subdivision approval specifically said the existing cottage must be demolished and the debris removed off-site. Has the developer complied with that? No. So that's an outstanding breach. But the developer's gone. They got their money. They've disappeared. They're off in Bali now, sitting by a pool, sipping cocktails. Right? So this is now the new buyer's problem. And without the insurance, they're on their own. There's nowhere they can go for this because nobody has responsibility for identifying these issues. Certainly the settlement agent that acted for them on the purchase, no settlement agent's going to be liable or responsible as part of their settlement agent services.
Well, it's not part of their job.
It's not part of their job, okay?
It's not an inspection service.
Precisely. Settlement agents aren't running around with shovels, digging holes, looking for asbestos. So it's just one of those risks you take on.
Despite the fact, I should say, a lot of people think they do and do come after us sometimes at strategic settlements for, why didn't you tell us that the eaves were asbestos? Mate, I haven't been to your house.
Precisely. Yeah, we see this a lot. Settlement agents in Western Australia are required to have professional indemnity insurance as part of their license. So that's all buyers are really caring about. Oh, I'm going to go after the PI provider. And we see it Australia-wide because obviously Stewart Title are active nationally. And there's the perception that settlement agents, conveyancers, lawyers are the gatekeepers for all risk associated with buying a property. Oh, my conveyancer will deal with that. But they don't. And obviously there's a very defined scope of services. So that's really where the title insurance comes in and protects buyers because it's really protecting them for these sort of risks we're talking about, which are well and truly outside of the scope of what your settlement agent's going to do for you. You take that risk on yourself.
I think what you've explained is some very real examples as to why, unlike a lot of insurances, in my opinion, people would see value in this. First question people are going to ask is, that's all nice, but what is it going to cost?
Yeah, and it's a great question. So the difference between title insurance and the other sorts of insurances that people generally are required to get, like home contents insurance, is that the title insurance premium is only payable once. You pay it once on settlement, and then you're insured for the life of your ownership of the property. The other aspect is that the premium that we charge is based on the purchase price of the property. So it's set in stone. There's a schedule. And so if you buy a property that's between $0 and $500,000, then you will be charged a premium of around $580. If you're buying a property from $501,000 to $750,000, it goes up a little bit more. So I think your average premium in WA would be hovering around the $700 to $1,000 range, but you're not paying that every year. You're just paying that once.
And then you're good.
Whereas with other types of insurance, you're paying way more than that, but you're paying it every year. And then it's probably the same for yourself. You don't make a claim on your home insurance, but for some reason your premium's just gone up 30%.
Yeah. I get that. I think all of us have felt that.
Why is that?
I think we're talking more like 70 or 80% in a lot of cases in the last few years.
Yeah.
The next question I think people would ask as well is, look, I'd say that is a reasonable premium to pay as a one-off especially, but is there any caps and limitations on it? Is it, if you're only going to give me $5,000 as a maximum, I'll take my chances?
Yeah, absolutely. And there are caps, absolutely. And we're very clear on those. When you buy a policy from us, we provide a lot of consumer information. So the main cap that we have is in relation to that risk we were talking about before of unapproved building work risk. So that's capped at $160,000 per claim, not per policy. So you could theoretically, and we have seen this, you could have a property that you just bought for $1 million.
Paid $1,000, let's say.
Paid $1,000 premium, and then you have a large unapproved building work claim, and that caps out at $160,000. It's the maximum amount of a cover for that claim, and we pay that $160,000. And then 6 months later, the council discovers another one that they missed the first time around, and you have a second claim on that property for a different structure. That second claim would attract another $160,000 of cover.
Jeez.
So it's not just $160,000 per policy for all claims made. It's $160,000 per claim. So that's the main cap. Other than that, the policy amount is really the cap on cover. So if you're buying a property for $1 million and, for example, you have all these sorts of issues, you're never going to get more than the $1 million that you paid for the policy amount.
Yeah, got you.
Okay. The only exception to that
So 6 claims of 160, I'm getting close to my $1 million. That's about as far as I'm getting.
Exactly, yeah. The main exception to that is we do provide cover for future fraud. Your listeners will probably be aware that there has been fraud in WA.
Are we talking about like the Nigerian prince sort of stuff? People selling my house on behalf of me and I didn't even know?
Exactly. So if you're title insured and you go off to Spain for a lovely holiday and then you come back to find that there's a for sale sign at the front of your house with a sold sticker on it, then under the title insurance policy that we issue, you have cover for that. You've effectively been deprived of your title because somebody's impersonated you whilst you're on holidays and sold the property under your nose to an innocent buyer. So you've lost title to that property. So you can get cover from us. Where the title insurance policy is a little bit different in those circumstances is that fraud event could happen, say, 5 years after you buy the property. So when you buy the property, the policy amount's the purchase price. It's $1 million.
Now it's worth $2 million.
Now it's worth $2 million 5 years later. So
that'd be a pretty good outcome.
Yeah. So for that particular future fraud cover, the policy amount automatically increases in line with fair market value up to a maximum of 200% of that purchase price.
There you go.
For free. We don't charge an additional premium for that cover.
Have you seen this just out of interest? Has this happened?
So there's been quite a lot of WA frauds. When I say a lot, there's been a handful of frauds over the years, but none of those owners were title insured. So their compensation avenues were a bit more limited to statutory remedies and a lot of
suing someone.
Yeah. So you have to actually, as someone who's lost title because of fraud,
you might be suing the real estate agent or someone.
You have to sue pretty much everyone.
Yeah.
It's almost like a fund of last resort, okay? So the government will eventually compensate you once you've exhausted all other avenues. And that involves you having to have a crack at your real estate agent, have a crack at the settlement agent.
The bank.
Maybe they didn't do everything they should have done, so on and so forth. The title insurance policy provides a kind of no-fault remedy to you. So you don't have to have exhausted all your other compensation avenues before you can make a claim. So.
Now, one of the most interesting parts of this conversation is I'm personally a client of Stewart Title in that I have made a claim and I have been successful up to the maximum amount of coverage in being able to recover costs that were unforeseen in my property. I purchased my family home and it turned out that there was no sewer connected to the property and we had to go and get a horizontal boring team to go and extend a sewer about 100 metres down the road in a very strange situation to our property. So we went on tanks. Now, that's the sort of thing where if I didn't take out the $1,000 or whatever it was title insurance policy at the time, I'd be stuffed.
Yeah, absolutely.
So I can sit here listening to these and I can really, I guess, relate to these situations because I know exactly how it would have felt if I couldn't have made a call to Stewart Title and go, hang on, I'm pretty sure I got a policy for this. Am I covered? And it was a really good experience, actually. There was a single person I've had to deal with from Stewart Title who's been with me the whole time, who's gotten back to me within 24 hours each time and been very kind and open about what I am covered for, what I'm not, what limits I've got, and has actually been really reasonable about the claims that I've made with regards to the contractors. And I think that's the only experience you really want, really, from an insurer is to understand where the parameters are, have a real person talk to you, and also just be reasonable about this is the situation I'm in, what can you do?
Yeah, absolutely, Trent. So the sort of our philosophy at Stewart Title is that the claim is what insurance is. It's the product. It's not the brochure. It's not the ad on TV.
Yeah, you see so many of them working with community and you're like, you're full of shit.
Yeah,
man.
It's glossy.
Yeah.
But in fact, what insurance is, what it boils down to is a promise to pay if the circumstances insured are triggered. And we take that very seriously. And for us, the product is the claim.
I've been in situations before and I've heard of friends where the insurer does everything they can to limit or get out of paying. Obviously they would, right? They're trying to maximize their profits that year and therefore minimize what they're paying out. But my experience personally, and this isn't a sell, this is just a reality for me, is that Stewart Title has been very open about exactly what I am open to and essentially saying, go find your contractors, send us the invoices and we'll look after it.
Yeah.
And that's all you really want from an insurer at the end of the day.
Yeah, absolutely. And that's great feedback. It's great to hear that because it is a priority. Because at the end of the day, as you said at the very beginning of this podcast, a lot of you people out there don't even know what title insurance is. Where everyone knows what home insurance is or home and contents insurance is. And in fact, in a lot of cases, if you actually read your mortgage documents, you're required by the lender to have it. You're breaching your mortgage if you don't have it.
But not title insurance.
But not title insurance, exactly. Title insurance is completely optional. So for us, if we had a title insurance product which no one ever made a successful claim on, ever, it's just theoretically sounds good. Theoretically, you're covered for these things, Trent, but we've never had a claim to talk about. Then there's not much point of having us. Why bother?
Yeah.
So the fact that we have claims and we pay those claims, and those claims illustrate the underlying
value,
risks
the need
and
for
value
it.
and the need for it. Because as you said, when you buy a property, what we call in WA green title, everyone assumes that the green title is going to have services that are connected for the sole use of the owner of that property. And that's what the law says. That's what most of the green titles are. But that's not a guarantee that's what you're going to get as a property buyer. And that's what happened in your case, that for whatever reason, that wasn't ever done. And so you bought a property that effectively had an underlying title issue because the services connecting your property weren't done in a way that complied with the green title concept in Western Australia. But who thinks of that when you're buying a property?
But I think the point to make here is that there are other insurers, I think, that would have done everything they can to try and put the blame back on me for not having dug a hole and found that there was no sewer connected.
Absolutely.
You hear about that all the time, which is why I'm such a skeptic of insurance generally.
Yes.
I pay my health insurance to avoid the Medicare levy. I pay my house insurance because I hope it doesn't burn down one day. And this was the first time where I actually made a conscious decision to go, you know what, I actually see value in this one. Which is why I have you on today, because we don't do sales here. We don't promote things here, but I genuinely see value in this. And I think more people who are especially in the development space or investment space where they're taking on the possibility of houses that are as is and all that complexity, or even just first home buyers who don't really know what they're getting themselves into. It actually, I think, is a valuable coverall that doesn't just last 1 year, it lasts a life.
Yeah, it's peace of mind. That's what insurance should be.
Paul, thanks so much for coming in. Stewart Title is making a difference, I think, in this country when it comes to the service they're offering and just title insurance in general. Let's hope the industry keeps growing. Thank you, mate.
Yeah, thanks for having us.
Thank you for listening to another episode of the Perth Property Show. If you've only just joined the conversation, you can catch up by heading over to our website, perthpropertyshow.com.au, subscribing to the podcast, or joining our Facebook page. Don't forget to tune in next Monday at 7 a.m. for more expert insights, local analysis, and suburb spotlights. Happy hunting!